I know everybody's busy. Hopefully everybody's busy right now. How's business? If it's like great, give me a thumbs up or a thumbs down if it's bad, or halfway if it's not really either way. Kind of interesting. I think that we could see a really busy second part of the year, right? Like if the summer purchase market isn't exactly what we expected, start maybe say in January of this year, that we could really see August, September, October be the biggest third quarter or fourth quarter when it comes to purchase and sale that we've ever seen. And who knows? I mean, there's a lot that can happen between now and then, but it will definitely be interesting to see, and I think that there's going to be a lot of opportunity. We'll go ahead and get started. It's 10:06 right now. I know it says that I'm Chris Haynes, and if any of you are confused, I am not. Chris is out of town, and so I'm Clint Haynes. I had to log into his Zoom, so you know, don't let it confuse you. Chris is my brother. Mitch Mallahan is also going to be helping today and leading through this with everybody. And you may have been invited by Chris or Mitch or Alex or Ben or Daryl, or I'm sure I'm going to miss somebody that could have invited you to this. We appreciate you joining us. We want to, just jump right in and really bring some value to your business today, hopefully. We definitely honor your time and want to make sure we're using the most of it. The loan process, right? So we're talking about something that maybe isn't the sexiest topic that exists. When we talk about the loan process, it's typically not something that makes you really stand up and cheer. If anything, realtors would probably say, I don't understand the loan process, and I don't understand it, but I also hate it, because lenders end up causing me a lot more heartache than they maybe bring value to me. I hope that's not the case with our branch, but I know that we know enough realtors to know that that's the case, and that sometimes is how they feel about banks and lenders. So we're going to talk about how we do things, and I think we do things that are quite a bit different than a lot of other places, and we're going to talk through our process, okay? I want you to think about two things as we're going through this, okay? Number one is, how can this help my business? Working with a lender that does the things that we're going to talk about doing, what does that add to your business as a realtor? Or does it add value to you as a realtor? And if you hear some things that you have questions about, in the chat section, throw your questions in there, and we'll answer those questions and address those. But if you hear something you're like, man, I really love that brings a ton of value, let us know, because we want to know if what we're doing really does help you, the realtor, or if there's something that you think could be adjusted or tweaked or changed. Let us know that too, because our process is a work in process. So we're always working through things and trying to improve. So number one, how will the things that we're talking about help your business? Number two, what can you implement into your business that will help you close more deals? I think this is huge. We're going to talk about how we take really a client from initial application, or from the time they become a lead, till the time through eternity, right? A client is a client forever. So we're going to be talking about before, during, and after closing. And after closing goes on forever. So think about some of the things that you might be able to put into your business, 2 or 3 things that if you implemented would help you close more deals or drive in more clients. So first things first, you should have gotten an outline of what we're going to talk about where you can make some notes. If not, again, in the chat section, let us know, and Robin will send you an email. Put in your name and email, and Robin will send you what we're looking at. But it always starts at the referral, right? So we always say when you refer us, if my number one ask is that if you refer my team, or if you refer Mitch or Alex or anybody, is to refer us with value. What that looks like is not necessarily giving someone 3 cards or saying, hey, Clint, I gave somebody your name and number. Did you hear from them? Right? Because that, a lot of times, we don't ever hear from that client, and there's nothing we can do to actually follow up or track that lead. But what it looks like to us is giving us their name and phone number, or having, if they do incoming call to us, so you've given us their info, them our info, and they call in, we take that lead, best way is for you to give us their name and number and email. Is anybody struggle giving out referrals, like referring a lender? Nobody? I've talked to a lot of people that do. So one of the things we've helped them with is an email template that basically all you've got to do is put in the name, our name, and the client's name. And it's an easy way to put us on an email with the client saying, hey, Sue, I wanted to connect you with Mitch Mallahan. He's my lender. He's awesome. He takes great care of my clients. Mitch, this is Sue. She's CC'd here. Here's her phone number. I'm going to let y'all take it from here, right? And then as a lender, we can go ahead and email the client back, then call the lender. And the ball's in our court to do all the follow-up, because we are going to follow up with every referral, depending on situations, usually between 5 to 7 times. If you give out a name or you give out a card, they're usually not going to call us. It's 1 out of 3, 1 out of 4. What do you think, Mitch?
Yeah, it's the same thing as like, you know, raise your hand if you've heard from somebody that said, hey, I gave your name and number to my friend or my neighbor or whatever, and then have never heard from them, right? That happens to everybody. And that's the thing, is that people get busy with their lives. They're thinking of maybe selling their home, you know, in 6 months. And so somebody referred you to them. That's great. But by the time that they're ready to sell, they've forgotten who you are. They don't remember that name. But if you are able to get their name and number, you know, 100% of the time you're going to call that client and you're going to connect and make that. And I think that's what, like Clint's saying, like one thing that we're really good at is that follow-up, and then selling you as the agent, so that way they don't go into an open house, find another agent, or talk to a friend and find another agent before you have a chance to work with them because they're pre-approved.
Yeah. And every lead we get, every referral goes on a lead tracker, so it stays in front of us forever, and we're able to follow up. But
you know,
referring us,
I'm gonna say something really, really quick here. It sounds silly, but is to have a memorizable phone number for your mortgage person, because then you memorize it and you can just spit it off.
That's
and
good.
I know that sounds ridiculous and silly, but when you memorize your mortgage person's phone number, it puts reality between, you know, you and the person you're giving all the information to.
yeah.
I know that sounds ridiculous, but I mean, it's worked for me for years. So
That's why my number is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So, you know.
absolutely.
That's a
good point.
There's a good point there, because if anybody's ever said to me, hey man, I really need a tax person. Who's your tax guy? And I say, man, my tax guy's the best. And they say, well, who is it? And I'm like, what's his name? And I don't know his name or his phone number, and I can't like give the information quickly. It's like, well, how good can he be if you don't even know off the top of your head who he is and how to connect with him, right? So that's a really good point. And what we always say is, when you refer us with value, like if you're giving a client to us, just say, hey, I work with Alex. I've been working with Alex for a long time. He's awesome and takes great care of my clients. I'm gonna have him reach out to you. Is that okay? Right? Always get the client's permission, but most people don't want to say no. They don't want to say, well, no, I don't want to talk to your guy. They'll usually say, okay, yeah, because you've taken control and said, this is what I'm going to do.
Clint.
Yeah.
How can I just ask a quick question? How many people here refer three lenders, 3 people in regards to anything when they're referring out somebody? Raise your hand if you refer, you know, give out 3 names. Okay. What and how do you address that, Clint?
So the way I think about it is, me personally, if I were looking for a CPA or a financial planner or a professional, and I know Larry, right? And I said, man, I really trust Larry, and I need a doctor, or I need an attorney for some reason. I wouldn't want the options. I would want your best person, right? And if I want 5, I would ask for 5. But as the consumer, you know, if I had a major situation where I need an attorney, I wouldn't want to figure out which one's the best. I would say, hey, who is your best guy? If you had to go into this situation, who would you use? And I think most people feel that way, even though they may not, you know, if you give 3 lenders out, they may not say, well, I don't want 3, I just want 1. But what they really want is the one that you would use if you were buying a home, right? And I think that's who you should refer, right? If it's us, awesome. If it's not us, then tell us and let us figure out how we can be number 1 on your list. But
I think that's a really good point, Clint, because like, you know, whoever you are referring, even if you give out 3 names, if you refer whoever you're referring, refer that person with strength and confidence, right? So even if it's not us, it's somebody, whoever it is, so that when you do refer them, that also teaches them not to shop, right? They're not shopping for different realtors too. I mean, you were teaching them to shop when you're giving them multiple options, saying, I know this guy's really good, but you really should shop it around. Well, that's talking about you and your business as well, and giving them, planting that seed as well.
Yeah. And the last thing I will say on that, this is the main thing I've seen with it, is it creates a little bit of confusion for the client, which then they move forward less quickly, right? If we tell them a conventional loan at 3% down is best, but somebody else is trying to talk them into FHA because they don't do conventional loans at 3%, which a few years ago, that was the case. A lot of lenders didn't do it while we were doing it, but then they would get confused and they're like, well, I don't know which one's best because one person's telling me one thing's the best and another one's telling me something else is the best. And they kind of freeze and then they don't do anything, right? And we've got to keep them moving forward if we're going to get them into a house and closed. So sometimes over information causes people to think and freeze as opposed to act. But that strong referral is where trust starts. Okay, it's huge. It's where trust starts. And you know, I think you should refer all your business partners that way. The first thing that we do when we get that phone call, and I'm going to start moving more quickly, is build up the referral source. So I don't care where it comes from. The first thing we say is, you know, hey, Joe, you were referred over to us by Sue. How do you know Sue? I want to know how they know you, because if it's we've gone to church together for the last 20 years, or that's my brother-in-law or sister-in-law, I kind of have an idea that they have a huge amount of trust for you already. If they met you at open house or it was a sign call or a Zillow lead, I want to know that, because I kind of have to lay it on a little more thick there to say, I can't believe you walked into an open house and met Sue. She is literally one of the best realtors that we work with. We work with tons of realtors here in town. Sue is one of my absolute favorites. So you are in great hands. Just know that throughout this process, she's going to take great care of you and help you through this entire process and hold your hand through the entire process. Who thinks that would actually help you with clients that haven't already been sold on you, right? Like if you get a lead from an open house and your lender's not saying that about you, they need to, because that helps that person. I can't tell you how many clients have said, it's really good to know, you know, we only talked to Sue once and she seemed nice, but it's good to know that she's that great, right? It will help you close more deals. So that's a huge part of what we do. Clients want to be led. Like write that down if you haven't written it down. Your client wants to be led through the process. They didn't hire you because, you know, that they just want to give somebody 6% commission to list their house, right? They're not just dying. They want somebody to lead them through the process, whether it's a buyer or a seller. So our job is to lead them through that process. After we call that cross-selling the realtor, or the triangle for trust. Number 2 is building rapport, which we take about 1 to 2 minutes to do that, but it's incredibly important. And again, something you probably, I don't know if you consciously do it or not, but good salespeople do it every single time. They don't just jump right in, but it's always a little bit of building rapport. So Mitch, like, what does that look like for you when you get a client on the phone for the first time?
Yeah, I mean, it pretty much looks exactly like that. How you explain that, it's the question is asked, you know, who referred you if they call in. You know, Jamie, awesome. Jamie is phenomenal. Jamie and I do a lot of business together, and man, she is an expert negotiator. She knows the market like the back of her hand. Like, honestly, it's hard to find a diamond in the rough in this business, and you honestly did. So I'm super happy you're working with Jamie. He's made a great choice. So usually that's kind of the process I go through to cross sell. And I genuinely enjoy working with everybody that I work with, that sends me business. And so it's very easy for me to have that conversation with them, and it's very genuine at the same time.
You don't feel like you're faking it.
No, I don't, because I'm not. Yeah, in the past, I haven't known that was an important piece to the process. And after learning that that's an important piece to keep that client, because we would have clients that would then, we'd get them pre-approved, and, a month goes by, and all of a sudden I'm getting a call saying, hey, we're writing an offer on this property. Awesome. Do you want me to go ahead and send that updated pre-approval letter over to your agent? Oh, well, actually, we're using somebody else right now. Or we actually walked into an open house and the agent said they could just draw it up right there. We never signed anything with the last agent, so we're just going to use this agent. And it's really hard for me to talk them out of that when they've already made that decision at that point. So that's how I had a lot of that in the past, but since having those conversations, I mean, it's a rare circumstance that happens anymore.
Yeah, that's awesome. So cross-selling and then building rapport, just asking the person a little bit about themselves, right? Diving in a little bit about them personally, their family, if they're looking to buy, do they have something to sell and where they're looking to be and why? But trying to find out a little bit about them as a person. You can spend 20 minutes building rapport, or you can spend 1 or 2 if you do it in a pointed way. I'm probably a little bit on the shorter side. The busier I get, the less time I feel like I can do that. But it's critical that we do it every single time that we're building rapport, and that we, I don't know how many times we've said this in the Lunch and Learn. You do business with somebody that you know, like, and trust. The know part comes from the referral. They know you because they were referred to you. The like part is because you are talking to them and asking them questions and building that rapport. And then the trust part comes by keeping those small promises that you make throughout the process. So build rapport. And then what we do is we jump in and take a full application. And this is a huge, huge part of what we do. We don't say, it's been great talking to you for 1 minute. I'm going to send you a link to an application to fill out online. We ask them the questions over the phone verbally. The main reason for that is, one, it allows us to continue to build rapport. It allows us to take an actual full application. And it allows us to really solve a lot of problems on the front end. I've always said, when a deal goes sideways the day before closing, it is very rarely something that's happened the week of or the day before closing. It's usually something that wasn't asked on the application that could have been solved literally on day 1 or day 2. What happens when you send somebody an application to fill out is they're driving and they're doing it on their smartphone, right? Or they're at work and they're not actually supposed to be applying for a mortgage at work. They're supposed to be doing their job, whatever that job is, right? So they're kind of doing 2 things at once. And I've had people tell me, like, yeah, I had a client that didn't close. This is a realtor saying this. And they on the application, they said that they didn't have child support, but they did have child support. Like, how do you miss that question? Well, you're probably filling out an application on your phone, and it's a box that's about the size of, the end of your pen, and you just clicked the wrong one, and you kept moving, right? And then it didn't come up for that realtor or lender, whoever, I'm not sure who the lender was. But literally like 2 days before closing, and the deal didn't close. And I always come back to that, and I say, if I ask someone, Mitch, have you ever been divorced? Do you pay child support or alimony? Like, it's impossible to answer that question incorrectly, because you're not just clicking a box and trying to get through it really quickly, but you're answering a question. And that goes through the entire application. So we have to get what a full application looks like is 2 years of work history, 2 years of housing history. Have you ever served in the military? Do you have any bankruptcies or foreclosures? You pay child support or alimony? Tell me where you bank and what accounts you have. Like, we're getting all of that information. It would be much faster on our end to just send them a link, because we could have a 1-minute conversation and send an email. Or we could take a 10 to 15-minute application over the phone. But we get to know the client a lot better, and we get an application that is 10 times better than when they fill it out on their own. And I just can't stress the importance of that enough.
I know 2 questions that we ask that's on our handwritten application. We ask every time that's not on an online application. And that is, have you opened any new credit in the last 90 days? And I'll tell you the importance of that in a second. And then have you, do you owe any money on your income taxes? And those are 2 important questions. Why are those important, Clint?
The credit is super easy. We pull credit, and if you bought a car last week, there may be an inquiry from that car company, but the new loan is not going to show up on your credit yet. So that is a deal killer just waiting to happen, because unless you go through and look at all the inquiries and then say, well, hey, I saw that Toyota pulled your credit, which you should be doing too. But if you ask it and they say, well, yeah, I just got a car like last week, I know for sure it's not going to show on your credit. And I can ask you, well, what's the balance and what's the payment? Oh, by the way, is there another car loan on your credit that maybe you paid off that we need to swap one out for the other? Right? So you're just getting all the right information on the front end. As far as owing money on taxes, owing money to the government is a big deal. Lenders don't like to do loans knowing that a tax lien could be around the corner because you haven't paid your taxes for the last 2 years on your income, right? If you're self-employed. So getting that information on the front end solves those problems coming up later, because sometimes that tax thing can come up on down the line when it's too late to fix it, or to fix it and still close on time.
Yeah, and a lot of borrowers have, lenders, we only need W-2s if they're W-2'd employed. But then if we do these background checks, we get transcripts on their returns. And if it shows that they owe money on those, that's when it comes up. So it's not on the front end. So if we ask a question on the front end, it eliminates that issue.
Yeah. And when you spend a little bit more time, and this is in the lending world, I think in real estate it's probably the same way, but in the lending world, if you spend a little more time on the front end, 10 or 20 minutes, it might save you a week later on. It may save you 12 hours of working on something later on, because you can start off correct and you can have a clean file from the beginning, as opposed to trying to clean up messes along the way. So full application, super important. That's why we do it over the phone. We set an appointment and then send a confirmation email, which is next, which is number 5, I think, on your list of things. We're not doing face-to-face appointments right now. What we found is we love doing face-to-face appointments. Our closing percentage is still really, really high when we don't do one. We will typically offer a Zoom meeting so we can still meet the client face-to-face. People like convenience. I think going forward, we're going to see more and more of that, and less people wanting to come to the office. I think as a realtor, you can do the exact same thing, right? Get a new lead, set an appointment to do a 30-minute Zoom call to go through their goals with them, exactly what they want to accomplish as a buyer. And you still get the face-to-face without getting the germs, or without having to go out of pocket to meet somebody in a crazy time when people aren't wanting to do that. We've been doing face-to-face appointments, and it's really been a selling point for us for the last 10 years, 8 years. I don't know how much we'll be doing it going forward. We're just going to monitor it and see. Right now, we can't do it, and our closing percentage is probably, I don't know if it's gone down at all. So, but anyway.
What I would say is I had been doing Zoom meetings before COVID, and since COVID, that's all I do. That's the way I do my consultations. And I've probably done one phone call consultation during COVID. The rest have all been webcam. Virtually everybody can figure out how to make it work, especially in these times, because everyone's more used to using it. And I've just as high, I would say, closing percentage. I don't think it hinders it at all. The face-to-face is the most important thing. Even if they don't have a webcam, the fact that they can see me and I'm a real person and I'm taking the time to go through this with them, and it's not just a quick phone call or something like that, I think is super important.
And you can share your screen, which we're going to talk more about in a second. Where
Yep.
That initial presentation, sharing the screen is important. So set an appointment, email the realtor with confirmation so that the realtor can stay in the loop on, we got your client, we've started the process, and they're set to meet with us on Thursday at noon. We send a handwritten thank you the following day, because that's something that, I don't know, I get maybe 1 or 2 thank you cards in the mail right now. They always stand out to me way more than the person who sends a thank you email. So that's something super easy to implement if you don't already do it. Handwritten thank you, every lead gets one. And then we do an appointment where, again, it's either face-to-face or right now a Zoom call. The same thing happens during the appointment regardless. So if they're coming into the office, their name's on a welcome board. We've got snacks and Cokes and coffee, and they fill out an all about you form. We don't get to do that if it's a phone call, but we still go through the same process within the actual meeting. So they meet with the loan officer or somebody on the team, and we go through building rapport. So again, thank you so much for coming in. Larry Oldham sent you over to us. Again, tell me how you know Larry. Man, he's awesome. I love working with him. One of my favorite people I've ever had the opportunity to work with. You know you're in good hands with him. And then we kind of jump into goals. I always start with goals, because knowing what the client's goals are, make sure that we have exactly what we need to put them in the right situation. And that's how we explain it. If I know what your goal is, I can put you in the right loan situation and make sure that we're putting you in the right spot. When it comes to the goals, and did you guys tell me if you have this, the goal sheet, the home buying process, is that in that packet? That was emailed to you?
Did everybody get the email?
Yes.
Okay.
All right, cool. So a few of the things we cover is, what is your goal for price point? What is your goal for location? Monthly payment and down payment. Those are the two most important things on that. Because a lot of times when we dive into what somebody wants their payment to be, what they want their payment to be and what they're willing to spend is two different things. So the way I word that question is, if you found the absolute perfect house on a monthly basis, what's the absolute most you'd be willing to spend? Taxes, insurance, HOA, like everything included for the perfect house that you just can't live without. And what I find is two things. One, wording it that way makes them go up to what their real true top end amount is. The other thing that's super important, and I think is relatable to real estate, when there's a husband and a wife or two people on the loan, what you find is a lot of times one says 1,500 and the other one was like, well, I was thinking 2,000. And then they look at each other like, really? And then they have a little side conversation in front of you in your office. But then you can get them on the same page, because it's really hard to sell somebody a house if the wife wants to spend $2,000 a month or is willing to, and the husband's stuck at 1,400. Those are two completely different houses, right? So you need them to be on the same page before you really find a house and fall in love with it, because he may be in love with it and she may be like, no, I don't like it. It's way too expensive, right? Anybody ever had that happen? Probably have had that happen. So diving in on down payment, right? Because sometimes people think I want a 0 down loan, but then when you start talking about gift payments, you can get a gift for down payment and different things. They realize, you know what, it might be better to get a gift and put down 3% because of different options that may come about. So diving in on that, finding out what's more important, monthly payment or down payment, time frame, all of these things are super important, and we use it later on in the process. But we also share it with you, the realtor, right? Because a client may be qualified to spend $400 on a house, but they really need to keep their price at $300 because of where they want their monthly payment to be. Has anybody ever had a client go under contract, and then when they go to sign their loan disclosures, they realize their payment's more than they can afford? They can qualify, but they don't want to spend that much. So then they use the inspection contingency and back out of the house. Has anybody ever had that? If not, that's awesome. I had it happen a few times back in like 2014, before we were going through this process the same way. Because just because somebody can qualify for 300 or 400 doesn't mean they actually want to or are willing to spend that much on a house when it comes to the monthly payment. Because at the end of the day, the monthly payment is the most important thing. That's what you are living with. So after we go through goals, we go through the home buying process. Mitch, you want to go through how you do the home buying process really fast?
Yeah, so during my webcam consultation, I have, I share my screen and I have our packet up there, and I basically go through, the first page is the home buying process, and we start with, pre-approval income and asset documentation. Basically I say, this is where we're at right now. And then I go through each step, next steps, go out, find a home, make an offer, go under contract. Then we send you your disclosures, and we order the appraisal, the title, and all of that. We send everything over to underwriting to get underwritten. Of course, they always find something. So we set expectations through the process too, that there's going to be more that we're going to ask for, but bear with us through the process. We express the importance of our Tuesday updates that we do because of the lack of communication in this industry. We go through, how the closing works, how we finalize numbers after you're cleared to close. And then we let you know, where to wire the money, or get a cashier's check, show up the closing, sign your closing docs, and you're done with that. So really kind of, I go into a lot more detail during the consultation of each one of those steps, especially for what I always tell people is first-time home buyers, it's like a dream come true because they have no idea about this process. Most lenders are, yeah, you're approved, go find a home, and that's it, right? You're approved to 300, payment's going to probably be around this. Go find a home. Well, we thoroughly go, and it's done by email. So we thoroughly go through step by step the loan process. So first home buyers, they're like, this is amazing. Like I know what to expect now. But also it's a great refresher course for a second time home buyer or somebody who's bought many homes, just to even more so, just so they can know how we do business and what to expect from us through the process, but also gives us the opportunity to remind them that there's always something else that you're going to need. I know you've bought in 3 homes before, but you know, the underwriter always finds something. So just bear with us through that process, which makes that process so much more smooth for you, the agent, as well. You're not getting an earful from them.
Yeah. So if you don't have something that kind of walks the client through your process, I suggest drafting that up and going through it every single time to set proper expectations. And it gives us the opportunity to pepper in little things that are advantages that we do that other people don't do. So we talk about Tuesday update calls, and my line is, the biggest complaint everybody has about lenders is lack of communication. The reason we don't have that complaint is because on Tuesdays, from contract to close, we update you, your realtor, and the listing agent. We talk about how quickly we can close a loan. We talk about, you know, all the little things, how we're 100% referral based, and why that's important to you, the client. Why would you care that we're 100% referral based? Because we are accountable to making sure you have a great experience, right? So like we kind of pepper in the things that differentiate us maybe from another lender. For you as a realtor, if you don't know what differentiates you from someone else, you need to come up with those things, have your process lined out, and then within those bullet points, talk about what you do that is different, that benefits them as a client, right? The next page is the 10 commandments, the do's and don'ts. This is, again, if you should steal this if you don't use something like this to go through with your clients. What not to do. Don't apply for or open new credit. We talked about it earlier. Buying a car can derail you. Don't make cash deposits or transfer large amounts of money that we can't track. Like, why is that a problem? So we explain it. Don't miss a payment, which I've had people do in the process. Don't quit your job. I've had people do, right? And I can't tell you how many times I'm going through this with someone and we say, don't skip a pay, we don't want you to quit your job or change income streams. And they say, well, let me stop you right there. I'm interviewing for a new job. And it's like, well, thank you for telling me. Let's talk about that. Because if you're changing industries, we've got a problem and you may not be able to buy a home for a little while. If you're going from teaching in Wilson County to Williamson County, who cares? It's still teaching. As long as the income's the same, we're good to go. But the only reason it comes up is because we go through this with them. So this is something good that you can go through with your clients as well. The needs list, which we've already sent them, but that's next. So what do we get up front? Driver's license, pay stubs, bank statements, tax returns, W-2s, blah, blah, blah. The next sheet is huge for us. It's all about expectations. Hopefully you have it. It's a picture of Uncle Sam, and he's pointing at you, and he says, Uncle Sam wants you to give us more paperwork. This is setting expectations with your client about what is required in the process and why. And we just tell them up front, look, there's a lot of paperwork that we're going to have to get from you. Bear with us. We like to do it on the front end because doing it on the front end makes your process go more smoothly. I promise you, all lenders have to get the same stuff. So if anybody tells you you can push a button and get a mortgage, that sounds great. It isn't true. So you should run, because the truth is we all have to get the same stuff. We're going to get it from you on the front end to make your process go really smoothly. But if at some point you think, man, this is a lot of paperwork, which is what we hear from people. It's like, we've already told them. We set the expectations that it was going to be a lot of paperwork. So they say, man, it was a lot of paperwork, but you guys told us on the front end. So they don't care, right? So expectations is no different than, you're not going to tell a buyer right now, hey, it's a great time to be a buyer. We can probably go in 10, 15% below list on anything we end up buying. I mean, it's a great market for that, right? That's really bad expectations to be setting. Like, we're going to get a great deal as a buyer in this market in Nashville. You're probably not. So like setting the expectations of how competitive it is. So let's make sure that the client is on the right page, and then talk about what are the other reasons it's a great time to be a buyer in Nashville, right? But getting a discount on a house isn't one of them. So if they think that, setting good expectations and getting them on the right page is super important. we've got a team sheet. We've got notes on the loan. I have a testimonial sheet that all clients get. So it's just, again, the same people get all the same stuff. At this point, they should be ready to buy a home. And I will just tell you what I found. When we go through this process, people go from being a looker to a buyer more quickly. Last year, I had a lady in my office. She had been looking for homes for I don't know how long, like a year. Never gotten a contract. Her realtor said, hey, I'm going to have her call you. I can't remember her name, but I will say Mary. Mary is getting ready to like stop looking. It's been too long. I'm telling you the truth. I sat down and went through this process. That afternoon, she went and wrote a contract on a house and bought a home that afternoon. We closed on it like 3 weeks later. What it does is it helps them move forward more quickly. They get off the fence more quickly because it takes a lot of the question marks out of the process. When you know what comes next and you have all the information, you make better decisions, but you also make faster decisions. And that's something I tell the client in that initial meeting. My goal is for you to leave here with all the information you need to make a quick decision so when you find the right house, you can confidently move forward on it. And what I found is that they do much more quickly than if they just have gotten an email from a lender saying, here's your pre-approval letter up to whatever amount and let us know when you're under contract. That's not real comforting. That doesn't help you move forward. So what we do at that point is, and this is number 8, and I promise we're going to be moving more quickly now. They get a thank you gift in the mail. Once you get pre-approved with us, peanut brittle, I send popcorn. Chris, back in the day, used to send chocolates. I don't know if y'all been outside today. It's hot. Chocolates will melt in the mail, so don't send chocolate. Popcorn's great. It's a local place down in East Nashville that I use. But it just says, hey, congrats on being pre-approved. We're super excited to work with you. Enjoy some popcorn while you're looking for your home, right? Or something corny. But sending them something with a thank you is big. We review their documentation. I can't state how huge this is. This is another thing that most lenders don't do, right? Their pre-approval is based off of what they said on the application and what the system says. If you don't review the documentation, then that's one of the problems that could be solved on the front end that gets overlooked. And then 2 weeks before closing, you're like, well, this client's, income is declining. Well, you should have seen that on the pay stubs or the bank statements, right? So you've got to review it. Can't stress how important that is. And the problem is either lenders are too busy so they don't do it, or they're salespeople and not organized enough to actually just sit down and do their job. So, and then the home search. So number 10, search for homes. We try to call everybody on Wednesdays every other week that's pre-approved. That can be a challenge the more people you get pre-approved. Again, something hopefully you have in your business where you're updating people on a weekly or every other week basis. Every client that's pre-approved needs to hear from us pretty regularly, or they'll lose motivation, or maybe they'll drift off and find another lender or a realtor. We don't want to do all the work and then let them go use somebody else. We want to do the work and then get to help them through the process. And then they find a home, they have their pre-approval letter, they make an offer, they go under contract, and that starts section at number 12, which is the during.
Hey, Clint, I was just going to say, if you guys have questions, feel free to put them in the chat box. I don't know if you guys see that. There's a button at the bottom where it says chat, and feel free to ask any questions. We can address them as we go, or I know we're going to address them at the end too, but feel free to just punch them in there.
Yeah. Conversion and closing percentage is all about 1 through 12, right? Or 1 through 11, I guess. If you're super, super diligent with follow-up and, you are building rapport and doing all the things 1 through 11, you're going to close a high percentage of people. If you're skipping out on some of those steps, or you're skipping out on most of those steps, your conversion or closing percentage is going to go down drastically. As a lender, now as a realtor, it's going to be similar. You got to kind of pick and choose what you're going to do. But if you've got a process that you're following every single time, and you know how much you're closing now, if you add in 1 or 2 or 3 things, your closing percentage will go from 20% to 30%. And I don't know if that sounds like a lot, but that's literally the difference in making, instead of making $100,000, making $150,000 or $160,000. Like, it will change your bottom line drastically just by increasing your closing percentage by a few points. All right, so the client's under contract, the realtor will send it to us, we'll prepare the documentation, and then the client will come back in or they'll sign their disclosures. They always do it electronically. It's super, super easy. But we have a phone call and we go through the numbers with the client. The reason we don't want to send the client the numbers and have them try to figure out what they're looking at, which is common. I will use Quicken Loans as an example because I think they're a great technology company. They do a really poor job of actual communication. Clients all the time will say, hey, I got a thing from Quicken. I don't know what I'm looking at. And, maybe they're shopping, right? So they'll send it to me and then I'll actually have to explain to them what Quicken is doing. How bad does that service sound? Imagine doing another realtor's job on a listing presentation, right? Like literally that's what's happening. They have no idea what they're looking at because no one's actually explained it. So we call them, get them on the phone, then email them the numbers because I don't want to send them the numbers and have them try to figure it out on their own. I want to walk them through it line by line. Does that make sense? So we go through all the numbers and then we send them a disclosure package to sign that they sign electronically. We order the appraisal immediately. That happens that day or on day one, depending on what time their appointment is. If it's in the afternoon, sometimes their appraisal gets ordered the next day. Get that question a lot from listing agents. When have y'all ordered the appraisal? It's like, yeah, we order it immediately every single time. The file is sent to processing within 24 hours. A welcome to processing email goes out. Attached is a do's and don'ts or a 10 commandments list as a reminder of what not to do. So the client knows again what not to do. And I want to tell you that's important because I've had clients a week or 2 weeks into the process say, yeah, I'm going to go buy a home. I'm sorry, not a home, a Jeep. And it's like, wait, you can't do that. Well, no, I really have to have one. And I'm like, you're closing in 2 weeks. Like, just wait and buy a Jeep after you buy your home because you won't qualify for both, right? You can get a Jeep loan in an hour and it takes you a month to get a home loan, right? Wait on the Jeep, buy the house first. But anyway, that reminder is always important. We order title, insurance, verification of employment, tax transcripts, all the things that we need to get ordered about on the front end. Mitch, our appraisal process, do you want to talk just a little bit about our panel and how we do it?
Yeah. How many do we have on our panel now? Is it 6 or 7 or 8?
5 or 6, yeah. We've had to add
Okay.
it, actually.
Yeah. So really the process, when we order an appraisal, we get the contract, sign the client up, get their credit card information. And the very next step is even before submitting to processing, their file to processing, we're ordering that appraisal. And we've got to go through what's called an AMC, an appraisal management company, a third-party appraisal company. So as you know, we can't talk directly with the appraisers. So, and we can't choose which appraiser we want to do the appraisal, although we have a panel that we've chosen the appraisers on that panel, and they go in a rotation. So they'll get assigned to one of those appraisers that we've chosen that are familiar with Middle Tennessee, with the area, and are familiar with what different neighborhoods are doing. So what's actually great about that is once, if we do have any issues, a lot of times, Clint, I know you've gotten, I'm sure, a message by the appraiser directly. They know us and say, hey, I might have an issue with this, or hey, can you address this? And we have a great opportunity to maybe solve an issue before we get that appraisal back in with an issue on it. So sometimes that can be resolved. Of course, we can never talk value, but there might be something else. Whereas I know like Quicken Loans and some other big companies, they don't have that ability. They've got a list of 100 appraisers that might be from a completely different area, driving miles just to come to an area they're not very familiar with. You don't know what you're going to get. So that's kind of one of the benefits that that we have, is that we have that tight-knit group of appraisers to choose from.
It's super important. You're never going to get somebody from, Chattanooga doing an appraisal here in Wilson County, right? Because we have local people and we have a relationship with them, which is huge. So is every appraisal going to come in at value? Of course not, because that's the appraiser's job is to try to find comparable homes that, justify the value that they're giving. They can't get it every single time, but our guys do a really, really good job of finding a fair value and then communicating with anybody that's in the process if we need them to. to make sure that it's explained and they understand exactly what's going on. But it is, you know, I've often said I couldn't find 10 good appraisers that I trust. So when US Bank, as just the first bank that came to my mind, has 125 appraisers on their panel, are all 125 good? Of course not. Like the top 10% are probably pretty good. And then as a realtor, you don't know if the appraiser going to do that is one of the top 10% or one of the bottom 10%. So if you're one of the bottom 10%, you're probably going to get an appraisal that comes back late, and there's a chance that it's not going to be great either. So I think our appraisal process is a big advantage for us, and a big advantage for our client or the realtors as well. What happens next? This is number 17, the file is scrubbed. What that means is the processor will go in, review everything. Anything that they know underwriting is going to ask for, they'll go ahead and get, because the more full of a submission that you can send into processing, the better to underwriting, the better off you are. And then we start our number 19. We start our Tuesday updates, which is on Tuesdays. We update the client with an email, and we call the buyer's realtor and the listing agent with a status every Tuesday. Couple of things. It's a service, right? It's communication. And another thing that it does, what I found is it keeps the listing agent from asking the buyer's agent a bunch of questions. When the listing agent knows what's going on, or they know they're going to get a call from us on Tuesday, they don't call you on Monday asking about the appraisal or asking what's going on with the loan, right? So you have less inbound calls, you have less interruptions and distractions, so you can do your job or do other stuff, right? As opposed to babysitting the loan or, you know, communicating double on a file when that's not necessary. So Tuesday updates is a big part of what we do. Number 20, processor gets any docs and submits it into underwriting. Mitch, do you know the definition of an underwriter?
Why don't you tell me?
I don't have the definition.
I don't think it's appropriate to say out loud, but go ahead.
What I always say the underwriter does is make sure that the box that the loan program is, that the loan fits inside that box. An FHA loan has thousands of guidelines that the loan has to fit inside of. Now, when we pre-approve somebody, we're basically pre-underwriting it. We're making sure their debt to income, and their credit score, and their income, and all of these things are accurate and fit inside that box, and that we have an approval. The underwriter has to come back, though, and double check all that, because their license is on the line. They also have to make sure that the verification of employment and the title work and all these other things are acceptable for that loan program. So if an FHA loan has thousands of guidelines that have to be followed, you've also got VA and USDA and conventional and Fannie Mae, Freddie Mac, which is both conventional, but they have separate sets of guidelines. So they have to know all of that to make sure that the loan fits inside the box, right? So that's what the underwriter is doing. The good news is the loan officers should be doing that on the front end, so that when it gets to underwriting, you don't have a bunch of issues. There's always going to be things that the underwriter sees that they ask for that we don't have in the file. An updated pay stub or bank statement, a letter of explanation on something. So what happens is after the underwriter approves it, it goes back to the processor so we can gather anything they need. Number 21, the appraisal comes back, title, all those things, so we can send it back in underwriting. The appraisal takes about 1.5, probably more like 2 weeks right now because everybody's slammed. The processor sends the appraisal to the client and to the buyer's agent so that you guys can stay on the same page. If the appraisal comes in at value with no repairs, the listing agent gets an email that says, congratulations, 123 Main Street. It came back with an acceptable value with no repairs. They don't hear what the value is. They don't get to see the appraisal. They just know that the status is it's good and nothing's required, right? Again, so hopefully they're not calling you asking about the appraisal status. Let's see.
The appraisal's taking a little bit longer because everyone's getting backed up because of the volume of business that's coming through the doors these days. I think that's important also just to remember that, you know, sure, most of the time we can close in 30 days, but things are taking longer. Underwriting's taking longer. Processes take, just the workload. So with any lender you're working with, understand that volume is at record highs right now, and every piece that's involved is seeing that volume increase, and it's having to deal with it. So just expect longer turn times on most everything during the process.
Yeah,
Just as a little side note.
for sure. That's definitely a good point. Let's see. I think we're on 23. Underwriter gets the loan and program and approves it to the guidelines. Conditions are published, which that's where anything we need from the client we get. Sometimes we don't need anything from the client, but we're getting something from insurance and title or whatever. But we gather those, and let's see. 25 was processor updates the client and copies the agent, so you stay in the loop. Client submits what is asked for, goes back to underwriting number 27. CD goes out 3 days prior to closing every single time, so we can get our clear to close. We do not have to have a clear to close to get a closing disclosure out. We get that question a lot. I think some lenders require the loan to be done and then a CD goes out, then you have to wait 3 days. We usually get our CDs out, I don't know. I know we track it. I don't have it in front of me. Probably it's several, I'd say 7 days before closing on average, but I could be wrong.
We really only need 3 pieces, right? We need that first underwrite, the appraisal, and the title. And we can always ask for an exception on not having the appraisal back yet to get the CD out. But usually once we get that back, it goes into, with us at least, it goes into a workflow automatically for our closer to send the CD out. So sometimes we have those 3 pieces back, and we're only 2 weeks into the process, and the CD goes out.
Yeah.
So we're not waiting on that.
Which is always nice. I will say, and not knocking title companies. Title companies are slammed right now. So it's taken longer than I've ever seen. I've been doing this 15 years. It's taken longer to get title back than ever. So that's one of the things a lot of times that is holding up a CD is we have to have title reviewed before CD can get generated without an exception. So that goes out. File gets cleared to close. So number 29, clear to close. Magic words, everybody's favorite words in the business. Loan is done. The goal is to get that done a week early. And again, right now, really is a challenge to get that done. But earlier this year and last year, I would say we were having our loans done 4 to 5 days in advance, probably 50-60% of the time. Again, we track that. I just don't have it in front of me, so I should, but I don't. So the processor, number 30, processor orders the closing. So the closer ends up sending the package to title, and they go back and forth. So number 31, the file goes to the closing department. 32, file gets worked on by the closer, and docs are sent to title. 33, title works on closing docs and draws up the CD, which is the final CD with 100% right numbers on it. 34, the closer gives the final CD approval, and the processor sends the CD with a payment breakdown to the client and copies the agent on it. 36, the processor calls the client and goes over the CD with payment and cash to close, and also details about the wire. Client gets a cashier's check or a money wire, which nowadays it's a wire almost always. For closing, closing gets delivered at closing. Now, I don't know if y'all see that, number 38. We don't do that anymore. It is mailed to the client after closing. We used to have it there at closing every single time. It was a logistical nightmare, and especially the more loans we closed, to try to get that many gifts to that many different places. Way easier to just send it to their house about a week after closing. And it's a nice little surprise for them because they've already settled, and then they get something from us reminding them of who we are. Client shows up to close and closes on the new home.
Hey, real quick, just as a reminder, our gifts, I know same with you, Clint, right? The gift is from both us and the agent.
Yeah.
And that's how the thank you card is signed.
Yeah.
So.
And I know a lot of realtors get a gift, but even if you do, it looks like you got 2. If you don't, then it looks like you did have a part in that. After signatures are verified, the closer will release the funds, and then the title company can disperse. And everybody's favorite part, other than the clear to close, that's when the realtors get paid. Number 41. So that was a lot of information that we covered fairly quickly. Thoughts or questions on any of that? Again, I would tell you to think through 2 things. Like, all right, through that process, Is there anything there that we do that helps you or that we could do differently that would help you more? We would love to know that because we are a work in progress. And then number two, which I think is as important, is there anything in there that you could implement that would help your business, that would change your business in a positive way? If so, we're going to get to this in a second, but I would say circle it or write it down so that you know what you want to implement from this. The after, and this is kind of like after and forever. So number 42, we cannot, well, I don't know. For a while, we couldn't attend closings. The title companies wouldn't allow anybody but the client to be there. I'm not sure how they're doing it right now. So we just call the client and say, how did it go? Do you have any questions? Thank you so much for letting us help you through the process. I really appreciate you choosing our team to be your lender. It's an honor to help you through buying your home. If you ever need anything in the future, let us know. If you ever know somebody who wants to buy a home, we would love to help them, right? So it's a thank you call and a congratulations call. 43 is a thank you letter is mailed to the client. The client is added to the database, which they actually get added to the database at pre-approval, but they're in the database forever. They get mailed to once a month from us forever. They get 2 to 4 calls a year forever. They get invited to client parties every single year. We were doing like 5 a year, 6 a year. Right now, I think we're doing like 3. Well, this year is different. We were going to do a sounds game and all kinds of different stuff. This year is different just for lots of different reasons. But client parties are huge. The calls are huge. The mailing is huge. It keeps us in front of the client. So if they ever want to refinance or buy another house or refer someone, they think about us. That gives us an opportunity to turn around and send that client back to the realtor. Or if it's a referral, we get to pre-approve that referral and then send it back to the realtor that sent us the initial client. So if Scott Richardson sends me a client that buys a house and we do his loan, 2 years later, that client sends me a friend, I'm going to pre-approve that friend and send it back to Scott Richardson and say, hey, Scott, I've got Joe pre-approved. He was referred by whoever, and, he's ready to go. He's expecting your call, right? So that's one way we help you grow your business. And let's see, 48, earn referrals and repeat business for the agent by staying in contact. Let me see. Thoughts, questions, Mitch? What are your thoughts and questions?
Well, I mean, what would be, I think I'm curious as to, maybe from this, what's one piece that could help? Like Clint, let me ask you, what if I know you're not a realtor, and it's really hard. I don't like putting ourselves in as other people, but what is one piece that you think that from this that you could utilize in the real estate world?
Yeah, so the easiest and simplest is the beginning section, right? So like having a standard process that you go through with every single listing and every single buyer, right? A presentation. I think that's really critical. If you want predictable results, you have to have a predictable process, right? If you go through the same process, before we had a process, this is what I realized. I'd meet with a client and sometimes it would go great. And I'm like, man, like we got that deal. There's no doubt they're using us. That was amazing. And then sometimes we would finish the appointment, the client would leave and I'd go, I don't know what happened there. Like it wasn't clicking. And the difference was not the person, it was me, right? When I follow the same process every time, I have a predictable outcome. And I follow the same process every single time, and that gives me a predictable outcome. And I know what questions are going to come up. And we always end that appointment with, do you have any questions? And more often than not, the response is, no, you've answered any questions I would have had, right? Which builds trust because I've given you all the information that you needed without you having to ask me for it, right? So if I only covered a third of it, and I said, so what questions do you have? And they had a laundry list of questions. I may be able to build trust by answering them as they come through, but there's also a chance that, like they're like, man, he really didn't cover much, right? So number one, I would say have a process for every single thing, and then doing the handwritten thank yous and the little gifts, right? If you can send popcorn when somebody signs a buyer's rep, or if you can send movie tickets when they get a contract on their listing or their purchase, which again, movie tickets, we've done that for years and years and years. Not the best thing to give away right now since movie theaters aren't open. But picking something and having a process around it becomes easy. It becomes second nature, but it does change your closing percentage by adding those little things in.
I think that's super important to highlight as well, just because, I've been here in your all's branch for what, 2.5 years, a little over 2.5 years.
3. I think you joined in like December. Yeah, so 2.5.
October of 17. Yeah, so almost 3 years now. So before coming on board here, I was in-house for a real estate company, and I didn't have a process, but no one ever taught me that you need to have a structured process. I didn't know the importance of it. I didn't really realize that I should have that. It was kind of, you try to inform the client, try to give them their pre-approval the same way, but it's nothing's structured, nothing's written down. Came on board here, which basically, kind of taught the process of how Chris and Clint do their consultations and all of that. And I got to say that it has completely changed my business. First of all, it's made me more professional. So when somebody refers you, they know like, hey, I know that they took me through this awesome process. You'll love using them. It's very educational. They answered all my questions. I feel like that makes it easier for people to refer me. And I've seen my business grow double each year. So,
that was going to be my question. What has your business done numbers wise?
Yeah. So, in the first year, it was kind of a rebuild year for me, and getting that system in place, because I've never had done it before. So it took a year for me to really adapt and get good at that consultation, get good at all the other little systems that we've implemented. But once I've gotten that in place, after being in the business at that time for 13 years, last year I had my best month ever. And then, best year ever. This year, I've already done as much that I did all last year. So I'm on track to double again. And there's not a whole lot I'm changing that I changed from before I had come on board here. The biggest difference is the consultation, I would say, and the communication, the Tuesday updates. And then also, because I have those systems in place, it takes me less time to do a lot of what I do. So I have more time to prospect and to build relationships.
You're able to streamline a lot of things.
I was able to streamline. And knowing, like, I just started doing the popcorn thing. Look, I've been here almost 3 years, and I'm just now doing the popcorn thing. I get it from a place in West Nashville. It's called Marigold. It's in that new L&L market. I don't know if you guys have been there. It's pretty cool. But they do all these different flavors of popcorn. We're going with the kettle corn because it's not going to melt. But it's a little touch that I've always put off, because I'm like, I don't have time to do that. I don't have time. Well, my wife went and bought a box of it, got my logo on it, got it in place. We have it now. And now all it is when we get somebody pre-approved, we already have their address, boom, pop it in the mail and go. Now that we have a box of it to pull from, it's not like, well, where do I go to get it? It's like, get the systems in place and put them there. And once they're in place, it's going to be easier to then, work those systems and those processes. And that's where the business really comes, and the referrals will come from all those little touches.
Yeah. And I will say, anybody on this call, if you got, like, you were invited here by a loan officer, so get with the loan officer who invited you. And if there's something that you want help with, or that you think that person can help you with, or anybody here, just set up a call, like a Zoom call.
Yeah.
I know that anybody in the branch here, our branch of loan officers, would be more than happy to do whatever we can to help your business, because that's why we're doing this lunch and learn, right? Is to help you with your business and shed some light on some things. I see some questions here. So, Elise, are 30-day closings possible right now? Yes, absolutely. So on a purchase, we can close in 30 days. the buyer has to be on top of it, right? Like we don't need a contract to happen on like a Thursday afternoon and then the client can't come in until Tuesday to sign their, like we need to get everything going. We get the appraisal order, but we can close a purchase in 30 days for sure.
I think the important part there is to get the client pre-approved prior to writing the contract.
Yeah.
Because I had one last week that they wrote a contract. I got the contract and the client calling me the same day and didn't qualify with just him. So we had to get mom's information. Well, mom had too much debt, didn't qualify with just her. We had to get dad's information. So it took about 3 or 4 more extra days just to get them pre-qualified that we're losing in the process.
Yeah. And losing those days on the front end, you can't make them up on the back end, right? They're gone. But if the client's on top of it, for sure, we can definitely get one done that fast. Quick question. Do you have a follow-up system for potential clients that are not quite prepared in that moment, but will be able to qualify in the future? We do. So what we do is on our lead tracker, we have like a color coding system. So basically everybody that comes in is either pre-approved, turned down, or somebody to follow up with in the future. So what we do is, let's just say somebody doesn't qualify because their scores are 50 points too low. We'll still have an appointment with them. We'll go through the process, and then we'll also go through what they need to do to get their scores up. And then we'll put on the calendar, right? So let's just say it's going to take them 3 months. Well, we may put on the calendar for 2.5 or 3 months from then to call the Joneses and see if they pay down that account or open that new card or whatever. And sometimes they've done it, sometimes they haven't. Now, if they're like, their scores are really, really low and we can't get the scores up, then we'll still give them the advice, but we don't put them on like a 2-year follow-up plan where we call them back in 2 years, because in my opinion, history has shown that if you haven't paid a bill on time in the last 5 years, you usually don't change those habits. But we will give them all the right advice, and we will give them the time. And if they do their things and we follow up with them, or if they follow up with us, because we'll leave it in their court, right? Like you've got to do all these things. And when those are done, give us a call back. And if they do them all and call us back, we're back in the game. But usually the ones who are 20 or 40 or 60 points away and just have a few little things to do, those are the ones who do it, and we're able to then turn around and help them. Does that answer? Does that answer that question?
A thumbs up there, it looks like. We also have some credit repair companies that we can refer them to as well, that can work with them on the back end, behind the scenes, and maybe in 6 months, a year, when they're ready, they send them back to us saying, hey, their scores are up now. They should be able to buy a home. So we do have those resources, and the what if simulator. I don't know if you mentioned that. We have a really cool what if simulator tool that we could just punch in there and say, what if this was paid off? What if this was removed from their credit report? What if they got on as an authorized user, immediately, or 1 month or 3 months or 6 months or a year? Like, we can pick the timeline and see what their score will jump to. So it's really kind of cool if somebody's close but not quite there, and all they have to do is pay down 2 credit cards, and that's going to cost them $500, and their score jumps up to where we can move forward. That's a really cool tool that we can use and get them to move forward quicker than just telling them, no, sorry, we can't do your loan.
Yeah. We always want to give any client that's allowed us to pull their credit the time of day to go through. Even if they don't qualify, we still want to give them the right feedback and information to improve. We don't dismiss them and just send them an email that says you don't qualify, and move on. We give them, like, we still call them and go through the whole process of what they need to do. Number 40, how long does it take generally for funds to be released? So there are certain things that have to be signed by the buyer, but also we've got to show that the seller has, so on a purchase and sale, talking about funds being dispersed, that have to be signed by the buyer and sent back to the lender, but also to prove that the seller signed. Because what can happen is, the buyer signed and then we disperse funds, and then we find out the next day that the seller didn't actually sign because there was a discrepancy on something. And now money is out there and we don't have a deal that actually went through, right? So we've got to have certain documentation back. And then it goes back to the closer who's been able to authorize the funding to the title company. The reason, and in this comment it said, they had a seller wait over a weekend because of banking, right? There's a cutoff for wire that will happen at the end of a banking day. And if it does happen, say at 4:30 on a Friday, it's probably not going to actually fund until Monday because it's just too late in the day. What happens though with a lender is when the package goes to title, the money is with it, right? The title
At least with us,
just,
for sure.
yeah, they just can't disperse it. So the money is there, but they can't start writing checks with that money until those certain things that are required are met. But the money is there. It's not like we're waiting on the funds to be sent. No, the lender is waiting to see that everybody's done what they're supposed to do from all sides, both title companies and all of that. And then they'll say, okay, here's the authorization. And then they're able to basically touch the money and disperse. Does that make sense? Larry Oldham, situation with another lender that my buyer insisted on using. First, buyers insisted with the final cash close was more than what the lender had indicated. How do you avoid that? Do you tell the buyer that the final cash close could differ if you don't have all the costs? So that's interesting. Lenders are held to certain fees on the front end, like lender fees have to be right? Your lender fees can't just change. Was it new construction? So the reason I'm guessing at that is, if I would be shocked if
It was not.
It was not new construction. So things like processing or underwriting or discounts, none of those things can change in the process. A lender can get the title stuff wrong, but then you get the fees from title when you adjust it. Could have been escrows, right, where they just estimated the escrows incorrectly if it's an out-of-state lender. We are usually within about $100 on the front end. I mean, and I tell people that at sign up. It's like, we can't get it down to the penny, but we're usually within $100, high or low. And
what happened? What happened in this case was the lender missed the city taxes and the transfer fees. It ended up being $1,200.
Well,
there you go. Yeah.
So that's just, they're allowed. I mean, I won't say they're allowed. That's not a tolerance cure is what we would call it. But that's just really sloppy on that lender.
It was. And what made matters worse is the loan officer insisted that she was right. And the difference was the title company jacking up fees. And I had to trace it and find out what the mistake was before I could finally calm the buyer down.
I would say that most lenders have their system automated to pre-populate fees. Like I know our system does that. Most systems have it where the fees pre-populate based on the purchase price, like those transfer taxes and stuff like that. If they disclose that without those fees, that is a complete, like that sounds like a manual system and not a very thorough system.
And
it wasn't.
That's one of those things where if they're using your person's usually going to figure out a way to, like, if they made that mistake, right? Because humans are human. Your person's usually going to find a way to make it right because they're accountable to you. And I'm pointing at Larry. Y'all can't see. He's on the top right. But they're accountable to you, right? So the last thing they want to do is a lender who's accountable to you is to have a client who's like, Larry, maybe send me to this guy and he kind of screwed everything up. It's like, well, hey, they made a mistake, and then they end up eating it and making it right.
Yeah.
Because you're working with Larry, and we take great care of Larry and his clients, we're going to make sure that you're taken care of. And they say, oh, thanks so much. That's awesome, right? But when they find their own lender, and who knows if it's somebody local or somebody out of state or whatever, it's like, well, there's no accountability. There's no, relationship on the line. And they're sitting there blaming title, right? They know it's not title's fault, unless it's just somebody who doesn't know what they're doing, like, at all. And they really do think it's title's fault. But, that in the real estate world, that's a huge waste of your time doing everything you had to do on that. Chase down title, find out what was really going on. And while you were doing all those things, you weren't going and getting new deals, right? So, it's frustrating when stuff like that happens. Appraisals, 2 questions. Can we see a list of the appraisal pool? Yes, we can get you that. does anyone review or verify square footage before telling the listing agent is back/adequate? So it's not really possible. So what the appraiser does have to measure. So that is what is used to verify the square footage. So there's not really a way for us to verify what they measured is correct, because we do see some discrepancies sometimes maybe with the CRS and what the appraiser said the square footage is. And we usually see that the CRS is wrong because they are not counting something that was finished out, like a bonus room that was finished out or an addition or something. But there's not really a way for us to verify square footage, because we don't know what the square footage is until they tell us what it is on the appraisal. Does that make sense, Jennifer?
Yeah, I just mean, right, we see it wrong versus the tax records all the time, but versus what the listing says. So I just had one a little bit ago that came in 275 or so feet short of what the listing agent was calling it. And so even though it's the same house, the same rooms are there, it still fits their needs. They felt like they weren't getting what they were paying for because they thought it was a much bigger house. And we wound up working it out, but that is, you know, if the listing agent gets told it's back and adequate before the buyer has a chance to freak out, process, it kind of takes their power away if they want to, you know, because they said they would buy 2,800 square feet. Now, if it's a 2,675, you know, then we have a uphill battle with the listing agent.
Yeah. I've seen that where it comes back before, right? Like it came back lower, but it's still appraised, and the buyer still was able to negotiate whatever. Because most of the time, that is a tough one, because sometimes the appraisal is not looked at on the buyer side for 2 or 3 days, right? At which point it's hard for us to wait. You know, we'll close 100 and something loans this month, and that won't happen, right? Knock on wood somewhere. But if it happens 1 out of every 300 or 400 loans, it's like, that's a really tough one. What I've seen is the one I'm remembering, it appraised that value, but it was also less square footage. And the agent came back and said, look, we don't care what it's worth. We care what we thought we were buying. And they got a reduction in price based off of, you advertised it, you know, at a square footage that's not correct. But again, I understand what you're saying. It's just a challenge on our end, because with the amount of, it's so, that happens so infrequently, that there's not like a process in place of like, well, let's send it to you and have everybody review it for however many days. Because sometimes we'll send it to a client and they'll a week later, they're like, hey, I haven't gotten the appraisal. And then they go back to their email and they find it.
Yeah. And
but that listing agent is going to ask us that if the appraiser goes out on Thursday, if they don't ask us on Friday, they're going to ask us on that Tuesday update, hey, tell me about the appraisal, right? So it's a hard one to for us to even say, well, it came back, but you'll have to ask the realtor about it, because then that throws up red flags too, right? So it's a tough one on our end. I'm not exactly sure how we could handle that. You know?
Well, in doing this 15 years, this has always been an issue. Like, I've never heard of a resolution to this issue, because when you have the buyer, you can't go in there. I mean, unless you're going in there and physically measuring the rooms, your buyer is. How do you know that square footage is right or wrong? You have to go off of what the agent's saying, the numbers they're pulling, and until you get that appraisal, you don't know if those are going to match. They typically do, but in your case, it sounds like that was obviously, there was something either mismeasured by the appraiser or mismeasured by the listing agent, or maybe they just pulled it from the previous listing and it was mismeasured, years ago. But what the appraisers do is they bring in their laser measure tapes, and they put them on a wall and they shoot the walls, and that's how they come up with their square footage. Now, if there's any sort of like basement space or anything like that, they might not even give it any square footage value at all.
Right.
So they're going to subtract it. So if was that the case, Miss, or not?
No, it was actually the listing was based on prior appraisal. So it was two appraisers that were just measured things differently.
So one counted a hallway or some small closet or something, and one did. I mean, you're talking about like 125 square feet, right?
No, it was like 275. It was pretty significant. It was two walls that they just had big differences on, and it changed everything.
Oh, I see.
Again, it's not I mean, the solution to our problem is to have the house professionally measured before we ever get it. As we list it and have the pictures made, I send out an appraiser and have it measured, and then it's professionally measured. And it's not, every appraiser will be a little different. And of course, and I know 275 is a pretty big chunk, but it's not an exact science.
Right.
Each one's going to be a little different. So 275 is a pretty good swing, but I've seen 100, 150. And the best thing to do is I have an appraiser out of Tullahoma, just for $75, he goes out, measures it, sends me what he's got.
Well, this listing agent, I'm sure, he used a prior appraisal, and when I asked him for it, he was able to produce it. So, he thought it was golden.
Right. I mean, I think anybody would think they're golden in that state, especially since another appraiser, measured it. So, and were you able to talk with the appraiser about like what the difference was, or why it was different?
Yeah, we just compared them, but we met the buyer over, and we wound up getting over it because, really, at the end of the day, the house was still the house she looked at, and it fit her needs. And
well, that's good.
And it appraised, even though it was smaller. So.
Wow. And I think there's a floor plan on the appraisers. Am I right, Clint? I could pull one up quickly, but I think there's a floor plan that they draw out the outline, and then they just put the measurements inside the box, right?
That's what we compared.
So, you compared those?
Yeah.
That's interesting.
Well, we have a lot of hurdles, just like y'all do, to get, that's just one example, but there's a lot of time you got to talk people off the cliff, and paving a way to what you're talking about to a good deal, and having somebody like Alex to help you as the loan officer, because I don't get into rates and payments and programs and all that. That's the best thing to do is let your mortgage person do all that, because Lord knows we got our hands full on this end of the stick to do our job and let y'all do yours.
For sure.
And just that, because I haven't seen anybody ever that even checks that. And to be honest, my buyer caught this because we want to know, are there conditions and is it good? And nobody ever really, looks at
that's
as big as they said it was.
On our end, there's you can check it against CRS, which is wrong about 30% of the time. So we've been spending a really huge waste of time because CRS is just wrong so frequently, and that would be the only thing we would be able to check it against, is something that's usually not right anyway.
Well, and as a lender, we're not worried about the square footage. We're worried about the value, that the collateral, the value of the collateral is there for what we're lending on. So if it's valued out, that's whether it's supposed to be 1,500 square feet or 2,000 square feet, that doesn't matter to us as long as it reaches the value that we're lending at.
Yeah. And then Taylor, I noticed you had said, do you notify the realtor of this follow-up? It's of course nice to know we are staying in the loop. What follow-up were you referring to on that?
Is she muted?
Yeah.
Unqualified leads.
Got it. Absolutely. So if you send us somebody and we, do our initial conversation, getting all their information, put it all together and realize that something's out of whack, credit, DTI, they've got a bankruptcy 6 months ago, whatever it is. We're going to usually either update you right before the call with them or immediately after the call with them, so that you are in the loop and you know exactly what's going on with it. That, hey, your client right now, scores are a little too low, but it looks like within about 3 to 4 months, they should be able to get their scores up to that minimum level. So in the meantime, they're going to be working on that. They're going to be saving up to that 3.5% down payment. And, you know, we also, even on that call where you're kind of delivering bad news, we still ask them, is this helpful? Who else do you know that we can help that might want to buy a home that needs some professional advice on the mortgage side of things? Because if we can generate a referral, we're going to send it back to you. But we definitely will update you, because the last thing, and I've had this happen, which is crazy. The last thing we want is to tell a client they can't buy, and then they call you up and they're like, yeah, let's go see some homes this weekend. It's like, we're 6 months away. Why are they going to see homes, right? Either they don't care or they don't understand, right? Like, they don't really understand that our time is our money, and that if they can't buy a home but still let you show them homes, that they're basically wasting your money. A lot of people don't understand that. So that way, if they call you, and it's very rare, but it's happened. It's happened to me before, where I'm like, the clients still want to go see homes, even though they know they're 6 months away from being able to buy. They just want to see what's out there. They just want to learn the market, right? Not something you want to spend your time doing is teaching someone the market that can't buy a house for 6 months. But that way you can then follow up and say, well, I talked to Clint and he said he can't get a pre-approval letter together yet. And you're like, well, yeah, no, I'm not pre-approved yet, but I still want to, you know, see what's out there. And then you can say, well, this is why we can't do that. It's because whatever's available now is not going to be available tomorrow, much less 6 months from now. Right? And you're not wasting your time on somebody who doesn't qualify. Then you can also have an idea of what the plan is. And that way, 2 months from now, you can say, hey, man, are you still working on paying off that credit card? Are you still doing, you know, you can kind of keep them moving forward and progressing down the path that they need to be progressing down, because that'll help keeping them moving forward and with both of us.
And I will say that the client, of my clients that refer me the most, besides a few that I've just done a ton of business with and referred their friends and family, the people that I help with rebuilding their credit that aren't ready, that might not even be ready for a year, because I've taken the time to walk them through, this is what you need to do. They have been my best referral sources when it comes to clients referring me business. Usually within the next month, they're sending their friends or their family or somebody, 1 or 2 or 3 people to me. It's very impressive, because they're like, no one else would talk to me. You know, they just pulled my credit and then they wouldn't even call me back. And so I took the time to go through that, and they refer. And I think that's super important for, you know, on the real estate side of things, even if somebody's not ready, to take them still through a process to show that you care and that you're going to be here for them when they are ready. And then to say, by the way, hey, I get all my business by referral. Just like I try to help you, I'd love to help your friends and family. Do you know of anybody? And if the answer is no, then great. Well, would you mind, passing my name along if you do come across somebody? Just planting that seed, because they have definitely been my best source of referrals, because I've taken the time with them.
Yeah, that's a really good point. We are right at a minute, right at an hour and a half. So we're going to wrap this up. Thank you for joining us today. I really do hope this was worth your time, because like I said, time is money, and none of you guys got paid to be here. So hopefully you can turn some of this into a money-making idea. Really do think about what you can implement into your business to either streamline it so that your time increases, because with more time, more prospecting, more deals, or things you can put in that will help your conversion or closing percentage go up and help you generate more business. Question, recording. Yes, this is being recorded and we should be able to send that out. I do not know how long it will take. So it might be like end of the week or Monday before that can happen, but we'll get that out to everybody on the call. And then let's see. Yeah, so hopefully this helps your business. If we can do anything for you to help your business, whoever you're working with, send them a message. We would love to sit down and talk to you about anything specific from this. And then we don't get paid to do these. We are lenders. So if we can help your clients, we would love to. If you sent us business already, thank you. I cannot say thank you enough for that. We really appreciate it. We want to help your clients. We want to help you. So anybody that we can help you with, please send our way. We will do our absolute best to take great care of them and make sure that you look good in the process. So I appreciate it. Have a great Wednesday. Mitch,
I was going to say that if you didn't, when you registered, if you put your license number in there, cool. If you didn't, put it in the chat box. I can see many of you have. Just want to make sure we're giving you credit for the CE for this class.
Good point. I completely forgot about that. So good call.
Yeah.
I appreciate it.
Thanks, guys.
We'll talk to y'all soon.
You're welcome. Bye.
Bye.